Welcome to Introduction to Cashflow Projections. So today we're going to be looking at why you need to create a cash flow in your business. How are you going to estimate what your costs are? How are you going to estimate what your sales are going to be in your business? And also, we're going to show you exactly how you can create a cash flow prediction for your business so that you can show it to other people and explain your business idea. So first of all, what is a cash flow? It shows what cash is coming in and out of your business. Make sure that you know that this doesn't show you whether or not your business is profitable. You may have taken out a very large loan. That means you've got lots of cash in the bank. It doesn't mean that your business is actually making money. So the cash flow is purely to look at the cash flowing in and out of your business. The cash flow will let you predict seasonality, busy periods. So let's say that you're a retailer and your busy period is in the run up to Christmas with people buying lots of Christmas presents. Then you will want to make sure that you've got enough stock in to make the most of that busy period in your business. You may even want to add on extra staff as well. Also, conversely, you may find that there are very quiet periods in your business. Quite often, people aren't wanting to start new projects just before the tax year turns in April. You may find that March is a quieter period for your business. And if you can plan for that and predict it, it means that you don't panic when you get to March and you find that there's not very many sales happening. A cash flow projection is essential for any sort of grant or loan funding. If you are asking for grants from the council or from another funder or from the bank, if you're asking for a loan, they will want to see a cash flow projection for your business idea. You may also find that if you're renting a property, the landlord will want to see a cash flow projection to make sure that you are going to be able to continue renting the property and paying rent on it through the course of the lease. When you look at your personal circumstances in terms of what you need the business to be able to pay you, the cash flow projection shows if that's going to be viable. So, everybody needs to eat, everybody needs to pay the rent and their mortgage and their electricity for their own personal expenses. This shows you whether or not the business is going to be capable of supporting you whilst you set up. The reason that the funders are interested in that is because they want to see that you're actually going to be able to dedicate the time to the business as you set it up. And be able to afford to live. The cash flow projection is very much a prediction. It's not a certainty. So we are going to be making guesses as to what we're able to do in the business with income and expenses. But basically, the more research that you can do, the more accurate your cash flow projection is going to be. So the more research that you do, the better the chances that your cash flow will reflect the reality of your business in that first all-important year. So this is what it looks like. The instructions on how to fill this is in the first tab of the spreadsheet that we send you. It's intro. And if you look at the second page, that is the cash flow template. That's the one that we're really going to be focusing on today. But just to mention that there are two extra sheets here, P&L, profit and loss, and balance sheet. And when you fill in the numbers in the cash flow, all of the numbers for the P&L and the balance sheet also pull through. So you're going to have three different financial documents to look at once you finish doing this. The numbers across the top, you'll see that there are 13 columns on this cash flow projection. The first one is pre-start period. I'll come back to that in a second. The next 12 are the months 1 to 12 of the year, the first year in your business. If it makes it easier for you, you can rename them to the actual months of the year you're going to be working on. There's nothing to stop you from doing that. The pre-start period is basically where we're going to put in anything that we spend before starting up the business. If you've made any sales, you can pop that in. If you've spend any money before you start the business properly, you can pop that into that pre-sales start period column. So I think the easiest place to start is probably in the expenses, because those are things that you can start to estimate and get quotes on right now. If you think of this as like a shopping list for your business, it will help you to kind of come up with all the different things that you need. So first of all, stock and raw materials. So this is stuff that gets used up as you sell it. You might have bought stock in advance to set up your business. You may need to buy more during the year. It might be something you buy every month or every couple of months. But as you use it up, you'll need to buy in more. You may also need to buy more stock as the seasons change in your business. So if you are a clothes retailer, for example, you might need to buy in spring, summer stock and autumn, winter stock, different times of year. So have a little look at different suppliers and getting quotes from them about how much it's going to cost you to buy in the stock, and pop it into the spreadsheet in the month that you're going to spend the money. So in advance, you'll need to buy some stock in advance to have stock in your shop or to have things to sell. It could well be that you don't have very much stock or raw material because the main asset of your business is going to be your time. And we'll come back as to how you can make sure that that gets accounted for in this. The next little header here is employee wages and national insurance. Please don't put your wages in here. Of course, sole traders don't get paid wages, they have drawings. So we'll come back to that a little bit later. But if there's any employees that you're going to have, these are all the different employees' costs. So that will be your pension, your national insurance, any sort of employee costs that you have, and their wages go in here. The next one down is rent. And of course, if you're working from home, you probably won't have anything in this column, in this row. So if you're going to rent something, you want to look at the pre-start costs. So you may be having to put down a deposit and the first month's rent in advance, which means that in the pre-start period, you'll have 2 months rent in there as a startup cost. Then you'll have the rent you pay each month, and you just pop those into the different columns all the way along that row. If you have to pay business rates, this is like kind of council tax for rental properties that are commercial. You need to check the Rates Assessor website, and for most small businesses, they don't need to pay rates because they will be able to claim small business rates relief on that. But we do have a website that you can check that out in terms of the address of your business. If you haven't found a property yet, but you still need to do a cash flow projection to see whether or not this business is viable, you can have a look at the different commercial properties that are available in your area. We'll give you an address to have a wee look at that online. And you can basically have a look at what the sorts of prices you might be paying for a property with the things that you need in it. So if you need a kitchen in it, if you need bathrooms, if you need a lot of office space, you can basically type those criteria into the search and see what kind of prices are going to be paid. Take an average and pop it in there as a projection. As I said, this is very much guesswork. It's very much a prediction, not a certainty. And therefore, if we can make a reasonable guess at what we're going to be spending, it makes it easier for you to be able to see whether or not the business is going to be viable. Heat, light and power is the next header. So this is basically your electricity and gas costs. So that might be that, you know, it's a previous property and you're able to speak to the previous the landlord or the previous tenant and say, how much did you spend on this? These costs are going up all the time. So if you can be quite generous in your allowances for this, it will serve you in good stead. Phones and internet access. Most businesses will have to have a phone line. You may well even use your mobile phone, your personal mobile phone for this. And HMRC would be looking for you to be able to produce a justification as to how much business use you're having of your phone and how much personal use. They only allow costs for business use. Therefore, make sure that you can have a little calculation as to how much you're actually going to be using that phone. Put a cost in there. Make sure you include broadband if you're going to have broadband access in the premises. Next, we come to insurance, and there are all different kinds of insurances. Businesses usually have to hold different kinds of insurances depending what kind of business they are. So I'll go through some of the most common ones right now. So the first one is contents insurance. So that covers any stock that you're holding. It also covers any you know, computers that you're using for business. If you are working from home, you may still need to have contents cover, because if you have a claim against your insurance and the insurance company discover that you have stock or business usage on your computer, etc., they might not cover it under your home insurance policy. So contents cover for businesses is quite standard, and it will range depending on how much stuff you are wanting to insure. The next type of insurance that most businesses have a look at is professional indemnity, and this covers you if you know, something goes wrong with the service or product that you're offering. So you may find that if you're a cleaner and you spill bleach on something or knock an expensive vase over, your professional indemnity would cover you for that. in terms of risk, it just depends on how much cover you think you might need. What is the worst case scenario that might happen? Lots of the insurance brokers will be able to help you with that. If you Google business insurance online, you'll find lots of different brokers, such as PolicyBee, Simply Business, Compare the Market, etc. There's also the big insurance companies offer insurance quotes. So AXA, Markle, Hiscox, you'll find that they are able to give you some quotes depending on what kind of cover you want to have. The other type of insurance cover you might want to look at is public liability, and that covers you for any sort of interaction with the public. So if somebody slips or trips or falls as a result of your business, you don't want to be held liable for that. So that covers people using your premises or people interacting with you as a business. Cyber insurance basically will cover any loss of data or recovering your website or social media if anything goes wrong. FSB have insurance that covers this up to £10,000 as part of their membership fee, but you may want to look at additional insurance on that. You might also want to look at key person insurance. So that covers you if you're not able to perform your duties as a business owner, and if you are critically ill or something happens to you, it means that the business is able to carry on without you. Employer's liability is absolutely essential for anybody that's employing staff. It is a legal requirement, so make sure that if you're employing people, you have that cover. The next heading is marketing and promotion, and that covers all sorts of different things. So it covers your website, it covers any sort of email marketing packages that you've got. It might also cover signages. It could also cover printing of business cards, postcards, things you use to promote your business. And that you can go and get some quotes for those kind of things. You also might want to include a fee in there for any design work that you need done, designing a logo, coming up with a concept for your design on your website. That's all covered under marketing and promotion, alongside things like your ongoing costs for hosting your website, ongoing costs for any marketing that you're doing on a monthly basis. So pop that in there. Miscellaneous and sundries is basically tea and coffee. It's like your petty cash you would have in the office. So it covers things like cleaning materials for the office, bin bags, anything that you're offering as part of your business to guests. Pop a little allowance in there because everybody needs some good coffee. Travel, that is for making sure that you've got enough money to go from A to B. So if you're visiting clients, you want to be charging 45 pence per mile as your mileage charge on your personal vehicle. Make sure under insurance that you've got business travel on your car insurance if you're using your car for business use. The other thing that you can have in here is any sort of parking charges, not parking tickets. That's your own fault. You can also charge any bus travel, any train travel that you're doing for business use. Bank charges in here, most business bank accounts will give you free business banking for the first year. There's also some really great deals out there at the moment. Some of them are offering free limited company setup, and some of them are offering free accounting software as part of their new banking clients package. So shop around and see what the best bank account for you is going to be. You also probably want to think about in here how you're going to take payments. So some of the banks will offer you a kind of a debit card machine. You might want to have a wee look and see if that's included in your business bank account. We have two separate rows here for loan repayments and loan interest, and the reason is if you're going to be taking out a loan to start your business, you need to account for the repayments and the interest separately, because HMRC sees these as two separate costs. One of the things that we're going to be showing you a little bit later is there's a startup loans company. It has a kind of loan calculator on their website, and you can pop the details in there of how much you want to borrow and how long you want to borrow it for, to give you an idea about how much that's going to cost you per month. There are other lenders out there. You may find that your own bank account is able to give you a loan, or you may find that you've got an investor that wants to invest in your business and you need to repay them. So that's where you put those costs in there. Accounting and legal fees. So this covers any sort of professional fee. So it could be if you're renting a property, for your business, that you've got some legal fees in terms of looking over the lease terms. Roughly sort of up to about £200 is reasonable for a very simple lease, but if it's more expensive, it might take the lawyer a little bit longer to have a look over that. Accountancy, you don't need to have an accountant do your books, you can do them yourself. However, for more complicated businesses, especially limited companies or people with employees, we do sometimes recommend that it's easier to use an accountant and take that little bit of headache at year end away. You might also want to include in here an allowance for using accountancy software like Xero, QuickBooks, Sage, Cashflow, etc. So if you're going to be using something like that to do your invoices and expenses, you want to make an allowance for that in here. It also covers any sort of professional membership. So if you've got an industry body that you're a membership for and there's a fee, you would pop an allowance for that in here. It can also cover general memberships like FSB membership as well. And don't forget that all Business Gateway clients get a discount on joining fees for FSB as well. So don't forget to ask your Business Gateway advisor about that. Repairs, that's sort of self-explanatory. Owner's drawings, I went over very quickly before, but this is basically your personal expenses for you to live off while the business is starting up. For some people, that will be a very high monthly fee. For others, perhaps they're continuing to work whilst they set up the business, and therefore they don't need to be paid their living costs from the business straight away. So it's a very personal figure in there, but look at how much it's going to cost you to be able to live. You'll find that the next one down is provision for tax and national insurance. That fills in automatically depending on how much profit your business is making. So we'll ignore that one. Don't worry, it does fill that in for you as you fill in all the other numbers. Capital equipment, vehicle or other equipment. So if you're buying something that has a value outside of the business, if you were to close the doors tomorrow, we would be able to sell that. So it could be a piece of equipment that lets you do your work. It could be a car. It could be a machine. Those are called capital equipment, and they have a value outside of the business. So that's why HMRC look at it slightly differently. You may well have some other costs that I haven't mentioned here, and we do have a couple of headers there for other costs. Just tailor it to what you need. If there's something in there that we haven't talked about, pop it in, and you know it's going to be an expense month after month. Make sure that you've got that in there. So at the end of this, you should have all the expenses for your business through the year and be able to figure out how much money you need in order to run the business. So we're going to move on to income. Now, basically, if you don't get your pricing right, your business is bound to fail. And there's lots of different ways of doing pricing, but I'm going to go through some of the most common ones here. The first one is basically competitor-based pricing. And this is seeing what other businesses charge people, making sure that you're in line with what people might expect to pay for that kind of service or product. Our business information service has got lots of different industry pricing guides. They'll be able to tell you what the normal cost is of a cost per hour for, say, a graphic designer or clipping a dog or all sorts of different things. So if you aren't very sure what other competitors are charging, give the business information service a phone and they'll be able to give you a little bit of advice on that. The other way of pricing your work is to do cost plus pricing. So let's say you're buying in stock at a certain level and you add a percentage on for your time and effort. Typically between 40 and 60% is the markup on most retail products. You may find that it's not as much as that, or it's even more than that, depending on what you're buying and selling. You might also think that your product or service is worth much better than anything else that's on the market. So therefore you want to charge a premium price for it. A good example of this is Apple earbuds, earphones for your business. There are lots of different wireless earbuds on the market at the moment, but Apple charge a premium price because they believe that there's the premium product and therefore they charge a premium price. You might have some other way of pricing up your work. It's absolutely your business and you get to decide. What I would say though, the only limit on it is that you have to be able to convince customers to buy at that price. So whatever price you charge, it doesn't matter. If you can sell it at that price, you can charge it. So we're going to look at the sales figures now, and this is at the very top of the cash flow projection. This is predicting what you're going to earn in terms of what the customers pay you. So that's what we're going to be looking at, and we've gone through a few different ways of being able to predict that. If you're buying a business, if it's an existing business that you're going to be buying over, or perhaps it's part of a franchise, ask the business owner if they're able to give you the last 3 years of accounts, and that shows you what the cash flow might have been. So, and what you could perhaps expect to earn based upon the income of the business so far. You'll see that there are 6 different income streams here. So that's basically so that you can sort out different types of product or service within your business. So it could be, if you're a graphic designer, you might charge an hourly rate for ad hoc design fees. You might also have a kind of social media package that you sell. You might also have a branding package that you sell, and you might want to split those things up so that at the year end, when you have a look at this, you can say, well, I thought I was going to sell 10 of those a month and actually only sold 5, or vice versa. You know, you might find that certain products or services are more popular than others. So if you just want to do one sales income stream, that's absolutely fine. You can pop that in. A way of predicting this is basically, let's say that you sell 10 widgets a day at £12 each. So if you're working 5 days a week, you would be timesing your 10 widgets by £12 each to make £120 a day. If you're working 5 days a week, that brings you up to £120 times by 5 days a week, gives you £600 of income that week. Times that by 4 to get monthly total, 4 weeks in a month, and you would pop in £2,400 in that monthly total. So that's a kind of way of estimating what you might make per week, per month, per day, per week, per month. You will find that down below in the income received, this line here, debtors, fills in automatically. And that's because we've made the assumption on this cash flow projection that you are going to get paid ASAP for all of your work. You know, they're either going to pay you by credit card, or they're going to pay you fairly rapidly via backs, whatever it might be. You're not offering any credit. If you are offering credit, you might want to tweak these numbers on this debtors. So basically, you might make a sale in month 1, you've given credit to the customer of, say, 90 days, and they don't pay you until month 4. So the sale would be £500 in month 1, but you're not actually receiving the money until month 4. So you would put the money received, income received in month 4, £500, because you know that you're not actually going to have that money in your bank account on that date. Lots of businesses don't offer any credit at all, and they expect payment on receipt or payment in advance. Oh, one more thing to go over here. We've got a couple of other things just beneath the income received. So the first one that we've got is owner's capital. And that is basically so that if there's any investment that you've made in the business, you want to be able to take that money back out of the business when it's able to afford to pay you. And therefore you need to account for that in your income received. So let's say that you've had lots of pre-start costs before you start the business, and you've taken that money out of your own pocket, and it's added up to, say, £2,500. You would put that as owner's capital, pre-start period. You've invested that into the business and should be able to take it back out without paying tax on it once the business is capable of doing that. The other sections here are for grants and loans, and that's where you basically would pop in if you're lucky enough to receive any grants, or if you are looking for loan funding, you would pop that in there. And the reason that that's separated out is because it's not counted as a sale, it is counted as a grant or a loan. It's not something you're going to have to pay tax on, because of course for loans you've got to pay them back, and for grants it's accounted for slightly different in HMRC. So I said we would give you a wee bit of information with some useful links. Here is our business information service contact details, and that can give you lots of different information on various different industries. It can give you information on pricing, industry organisations, standard practices. So it's well worth having a wee chat with them and seeing if they're able to give you a report on your industry. The second link that I've given you is a property search. That's for commercial property, and you'll be able to see roughly what kind of prices you might expect to pay for the type of property that you're looking for. There's also the rates assessor info in here. That will show you if a property has to give you, has any rates charges associated with it. Again, as a small business, you might be able to claim some rates relief on that. So do take a wee look at that. I've also given you the Startup Loan Company. They've got a loan repayment calculator on their site, and you'll be able to work out roughly what you might expect to pay for a business loan on there. So if you've followed the instructions, you'll have something that looks a bit like this. And it is, you know, you've got all of your different sales, you've got all of your different income, you've got all of your different expenses in there. You will notice that down the bottom, there are lots and lots of red numbers. It's absolutely fine. Don't panic about it. In this particular business, they have, you know, spent money on lots of different things that they might not possibly need in their business. So your Business Gateway advisor will be able to have a look at the different expenses, talk through the plan, and make suggestions as to how you can change those numbers, do things slightly differently to try and minimize the number of red numbers down the bottom. So if you've done that, you're still getting lots of red numbers, don't panic, just send it to Business Gateway advisor and they'll be able to take a look at the numbers and see if there's anything they can do to help. Next steps, check with market research for pricing and our business information service. If you have completed your cash flow, please send it to your Business Gateway advisor and they can help you if you're stuck or you've got lots of red numbers down the bottom. If you aren't sure who your Business Gateway advisor is, please give us a call on 01698 756 956, or you can email northlan@bgateway.com or southlan@bgateway.com, depending on which area you're in. Thank you.